AI is moving faster through financial services than almost anywhere else in the economy. And this year, the conversation has shifted from how do we adopt it to how do we control it. So today I wanted to bring in someone who spent his career on exactly that fault line, where innovation meets risk and where good intentions meet hard operational realities. Armel Roméo Kouassi is a senior vice president and global head of asset liability management at Northern Trust, where he manages liquidity, interest rate risk, and balance sheet strategy for one of the largest custody banks in the world. Before Northern Trust, he built that experience across Citi, State Street, and Merrill Lynch. So he's seen how AI, risk, and governance intersect from nearly every angle of global finance. Armel holds an MBA from Wharton, master's degree in finance and in statistics and economics, and he's also become one of the more thoughtful public voices on responsible AI governance in finance, arguing that the mandate for AI has to be set at the top of an organization, not bolted on after the fact. Today, we're going to unpack what AI means in financial services from both sides of the coin, the real opportunities it's creating, and the threats that are keeping regulators and risk officers up at night. Armel, welcome to the show.
Thank you. Happy to be there.
Where do we find you today, Armel? What part of the world?
I'm based in, I live in Connecticut. I'm in the office of Northern Trust in New York and Manhattan. Always wonderful to travel. And Grand Central, I consider that the most beautiful train station in the world. And the headquarters of my company, Northern Trust, is in Chicago. I'm a global traveler. From my accent, you know that French is my native language, born in Africa, and I had a global career. G Capital, Germany, Netherlands, and Citibank here in US, M&T Bank, State Street, and Northern Trust.
So let me start at the beginning here. So, when we look at banking, we look at financial services, obviously very highly regulated, very highly governed. And we look at AI today, and you're at the intersection of this. So maybe why don't we just start off with how did you get so enamored by the value here? What was really the pivot point and the ignition point for you to say, I think we should be a first mover here. I think we should really kind of dip our toe in the water and see what's possible.
Yeah, no, I don't. I think that's a good question. I do think the way I think about it is that the financial industry is one of the most innovative industry in the US, and I would say US is at the top of the financials and the capital market because of the innovation in financial industry and the moving of capital. And AI, the rise of AI, it's fascinating and it's exponential. And I do think if you want to think about making a strategic plan for the next 10 years, you have to take that into account. And client dictates the adoption of AI from the financial and industry perspective. As it's often said, banking, it's a people business. So what's the direction the client takes is where we have to go, and that's very important. And one thing that you know is that financial industry, I think we're a huge user of analytics, of data analysis, and this is critical. What AI has does for us is that it's compressing the distance between what I would consider signals, data analytics, and the decision. So for us in the balance sheet management, in the liquidity management, the ability to identify pattern detection of pattern at scale, forecasting, reconciliation of data, and all of this is being now done at scale. And the opportunity that is within AI is tremendous. Naturally, there is a risk. Probably we'll talk about that as well. But we are at a tipping point, and the improvement of AI has been very exponential. If you listen to all the earnings call for all the major banks in the US, all the CEO has now pivoted and put AI as the top of the agenda.
Oh yeah, there's no doubt that the market is always listening for how many times AI is mentioned. Let me ask you for a contrast here. How would you, if you look at this moment, this pivot, this tipping point, as you called it, and I compare it to when Spreadsheets, when Excel and Lotus 1-2-3 came into the world. Do you think this is bigger? Do you think this is the same? How do you compare the two?
I do think this is clearly bigger. And the reason is the following. Number one, if we think about the Excel coming to the world, I do think there is a sense that it's a tremendous progress, but there is a sense that there is a cap into it. I think with AI, I do think there is a sense that the improvement is exponential and the transformation is exponential. And there is also a sense compared to most recently the dot-com bubble is that it's something tangible. You can already see how it's been monetized and the true impact is creating not only in financial industry, in healthcare, in many other areas in the world that is generating tremendous impact. I recall I was in Davos earlier this year, and I met a CEO of an Indian bank, and it's entirely AI driven. I met also an entrepreneur in healthcare, and he was building a device that is doing diagnostic through a mobile device and leveraging AI. And that's a tool that he's planning to use in underdeveloped country. Naturally, it's 99% or 95 to 99% accurate. But for people that don't have access to healthcare, I think for them that is a tremendous progress. And when you see the development of a different large language model, and every month or every year, I think it's clear that the transformation is exponential. So we don't even know how to follow through. I think even as a bank, I think on a daily basis, the adoption, the regulation, I think keeping pace of the transformation of what's happening, it's mind-boggling. I think it's a tremendous transformation. In some measure, it's exciting, but a little bit scary as well.
Yeah, I heard you. I mean, there's so many good things in what you just said. I just want to kind of touch on them to make sure that I've internalized them. So the first you said, Excel was a better calculator. So if we think of an abacus going to a calculator and a calculator going to Excel, it was a better adding machine. And it was very effective at that. But what I heard you say was AI is more. AI is actually helping us make the decisions, helping us to craft or make better decisions faster, which is huge. And then I also heard you talk about in Davos, the AI native companies building on the back of AI first. And frankly, it reminds me a lot of the banking sector in Africa that was built as mobile first, banks that never had a branch, never had anywhere to walk into, but built incredible businesses on the back of not even smartphones. Like I'm talking old school cell phones. And so you've kind of really prompted the fact that this is as big a moment as you've explained it to be.
Yeah, no, absolutely, and I agree with you with that conclusion.
So let's jump in. I mean, look, we can all talk about how excited we are. We can all talk about how great this is, but when the rubber hits the road is measurable value. There's a lot of investment. There's a lot of talk about token maxing. There's a lot of talk about CFOs or heads of IT getting bills for these large language models and having a lot of questions about, did they get the value? Was it worth it? Why don't you share with us a little bit about where in your industry you're seeing AI creating measurable value in terms of liquidity and balance sheet management, and how that human plus machine, human plus AI is actually coming together within your business?
Yeah, no, I think that's interesting a question, and I kind of alluded to that earlier. Clearly, the financial industry is one of the biggest users in terms of data analytics to make a decision. And from my perspective, AI really is compressing what I see as the distance between data analytics signals and the decision making, because we have the ability now to have a better input, faster detections and cleaner data, and the decision itself is much faster to be made, and we're able to run various scenario and strategy at a record pace, which a human could have not done. So when you think about managing a larger bank like with Northern Trust, JP Morgan, the ability on real time to have a platform that can identify pattern within transaction, within customer behavior, and modeling those to help make a decision, that's super powerful. Naturally, it's not 100% accurate, but that 99% accuracy, I will take it. The ability to forecast, the ability to generate various scenario and think through those scenario based on prompts. And so that gives you a guardrail to make a decision. So that's absolutely powerful. And I do think there's no way an analyst could have done this type of work. And I think even something as basic as coming in the morning in the office and having all the market summarized for me with some of the key flavor that I expected, or some of my email prep, I think that's tremendous. And if you think about some of the executive like myself, not English native, I don't worry about anymore about how I write the perfect email to the CEO or to a client. It's already done. That's a given. So the focus is really what is the value added I'm bringing to that particular equation.
Okay,
Now,
let me press on that. So the value that the human is bringing to the equation, I'm super interested. So
yeah,
now that a lot of that other stuff that used to occupy your time is not there, where's the kicker? What is it that you have more time to do that you couldn't do before?
yeah, no, I do think I have more time to think about strategically how we can um, think about growing the business. Number one, I have time to think about much more what is the risk appetite or how we can recalibrate those risk appetite. I think that always will need some human judgment. I have a time to think about in the range of scenario that's been proposed, what is the tail risk? How do I think about that tail risk? I have a time to think about concentration risk. I have a time to think about accountability and the regulatory aspect, and I have a time to think a little bit about crisis moment. Which sometimes it's in the fog of war. Sometimes without AI, we think about the BAU. But now I have a machine that can do all of those things for me. So I have a time to think about everything that is tail, everything that's strategic. And to be fair, also, hey, you have time to think about how you develop your team, how you think about the people, how you think a little bit more long term versus short term. Because some of the analytics, as far as you have the data in place, some of the analytics, the AI platform can generate those, and you can have a meaningful conversation around those. I have meaningful conversation on all my meetings because I know I can use AI to prep me for those meetings. I think there are a lot of productivity that comes with AI that wasn't there before.
I think you touched on two things there. I think you really said it gives you context,
Yeah,
and then you add to that context. But more importantly, you spend more time communicating, which as humans, communication is really what makes us a team, what makes us a unified force, what gives us shared vision, what gives us alignment and accountability. So, if I draw off of all this very positive energy that you've driven with Northern Trust, if you were to boil it down and look at the peer group, just look at financial services in general, what do you think leading institutions like Northern Trust are doing differently that others either haven't figured out or maybe are just a little too scared to do right now?
I would say the financial industry in general, we are not leading the path in AI, and there is a reason for that. It is because we highly regulated. I would say the fintech industry, they have the speed at which they adopt AI, it's much more faster. That's clear. But I would say that to our credit, we heavily regulated, probably the most regulated industry. We're moving at a certain pace. We invest at a certain pace, but we much more, and we also have a legacy system which we have to handle, but we much more thoughtful. And I do think we get to a point where we have the ability to deploy AI at scale, which is a benefit to the industry as a whole. And I do think as in a financial industry, I do think in general, because we so much driven by innovation of our clients, whether many of our clients are, there is a consumer and that consumer client, but also sophisticated clients, whether it's hedge funds, sovereign fund, they're already very much in tune of the development in AI. So they will ask for us to follow through. So we have to follow our clients. So as I said, people, business, and it's key. Clients dictate the path of where we need to go. Naturally, there is a regulation that we need to follow, and I do think that has created a positive behavior. I think within the financial industry. I think for me, clearly this year has been a tipping point in all the earning call. You can clearly see the amount of investment that's been pushed on AI, whether it's HSBC, Santander, Northern Star, JP Morgan. Many of the firm has put a lot of investment in AI, and AI has been at the top of the agenda in the boardroom at the CEO level, and that has really driven a positive impact across the organization. I'm not sure over company or over industry has been as disciplined as the financial industry. We've been slow to adopt it, I think, compared to FinTech, but I do think we've been rigorous in deploying it, and I do think we have the ability also to deploy it at scale.
So you talked a lot about top-down support. You talked about CEOs kind of being the lead driver of, we are going to bring this into our business. What would your recommendation be to organizations trying to sell this upwards, trying to get the board and the executive team to really understand the value here? What would your guidance be for them?
I think clearly, I think AI has to be driven from the top. I think Gartner did a research in terms of the success rates of AI adoption in within companies, and company where AI is driven from the top, from the CEO level, I think have much more success rates in adoptions and deployment and implementation of AI solution within the company. And company that the CEO is not supporting, or maybe stopping between the deployments of the implementation of the AI solution, 95% of the case, it fail. So clearly, that CEO engagement, that board engagement, it's critical for the success of the deployment of AI. And to be frank, I do think some board are not fully educated about the risk of AI. I think none of us are really fully educated because it's going at such rapid pace. And so having external parties educating the board about the value of AI, the risk of AI, even educated the board about some of the risk we have to pay attention to, I think those are critical. And the value added in terms of the productivity in terms of fraud detections, it's one of the most material impacts of AI within the financial industry, and it's very visible. It's something that we see, and I do think that's also a selling point to the board. Certainly, I will conclude by saying it's going so fast as that we have to constantly think about the governance, the control, the regulation around it. I think there are a lot of talk about human in the loop, for instance, but which is a good thing, but how do you implement that as you have a lot of agents being deployed and executing on a daily basis, thousands or hundreds of tasks? How do you put the human in the loop? So building that framework, that infrastructure, all of these are really key things that the organization has to think about.
Yeah, so let's use that as a jump off point. You talked a little bit about risks. We don't understand all the risks yet because it's evolving so quickly. Let's talk a little bit about this. So, we start to think about, we talked a lot about the positive, but if I look at things like robo-advisors with kill switches, or I think about AI agents taking unauthorized actions, or look at potential scams being driven by very sophisticated bots and very sophisticated programs. How do you view these kind of at the highest level? I mean, how do we look at this and say there's light and there's also a shadow? There's a lot of good, but we also have to make sure that we're covering ourselves against this risk. How do you manage this dichotomy within the organization?
Yeah, no, I do think that's a good question, and it's always challenging to answer those. Before I give the answer to that, one thing to me though that kind of keep me at peace a little bit when I sleep at night is that some of the founder of a AI tool in general, they did it for the right reason. If you think about, for instance, I will use Cloud's Anthropic with I forget his name, Amadei, I think his name.
Dario, yeah.
Dario Amadei. When he's founding his company, I think he's been very much impacted by the death of his father, right? He was trying to think about how he can cure diseases at scale, right? So there wasn't the thought beyond AI is positive, because some people think that there is negative thought behind AI and all of that. So that one thing I wanted to put out there. So I do think in general, from my perspective, is AI has a lot of value for the financial industry, and in terms of how we protect ourselves and how we use it for the benefits of the organization, and I think for the role, I think it is the education aspects. I think the training aspects of the users, whether it's the general public, as well as the professional within the banking industry. It's important to educate the people around the type of risk and the type of question that they have to ask themselves in terms of the data and the response that they're getting from the AI engine. I think having a response from a generic chat GPT general public versus a governed company response, let's say from whether it's Northern or JP Morgan, which is heavily regulated, it's not the same, because we are accountable to that. It doesn't matter to me. It doesn't matter if I'm using an AI machine, AI tool or not. The response that come out of it, I'm still accountable to it. So there is a governance, there is accountability aspect to it that I think it's very, very critical. So there is a clear boundary. So that understanding of the source of the data and on that educational aspect, I think that's critical for us, I think, as a society, to make sure that we use it for the right reason, and we use it for I think, for enhancing the world versus creating more issues for ourselves.
No, I like what you said there. I mean, you can go and get your generic answer from Google, or in today's world from
Yeah,
ChatGPT or from
sure,
Claude
sure.
or from, but I mean, I know that you kind of talk about this as the consumer trust gap. It's kind of like, what's my relationship with my vendor? What's my relationship with the company I'm getting the information from? And I know you have kind of a crown jewels framing here. So maybe share it with folks as it relates to this kind of consumer trust and what it means to get information from an established organization and their projects versus, hey, I don't need to subscribe to any of that. I'll just get it off the open internet.
Yeah, no, I do think, to be clear, I think we democratize society. So there are a range of information. So by no means you have to access those information. I do the same, and that enrich yourself. But you have to have the critical thinking to decipher between this information. And this is, from my standpoint, one of the key skills that our kids and ourselves we need to have in this society where AI is going to play a big role. That critical thinking as a human, I think that's very, very important. The ability uh, and challenging every information that you're getting from the generic AI tool, from the internet, it's very important. The source of information, challenging that and reconcile with other information, that's very important.
Hmm.
Because clearly, from a financial industry perspective, just by the nature of the fact that we regulate it, so we put a lot of focusing on the type of data that we receive. We put a lot of focus on the fairness of the data. Naturally, there is rule and regulation. We could not discriminate, for instance. So for us, that very, very important. And we have boundaries in the information that we disseminate it to the world, right? There is always a human accountability in those information. Doesn't matter if it's AI, even if it's thousands of AI, there is somebody within the organization that's accountable to that information. I cannot tell the regulator that this information, this balance sheet, this earnings increase is due to AI. I
Yeah.
will tell him I'm in charge of it. I'm responsible. I understand what's going on. I have to explain to him what are the driver of it. So there is a level of accountability that I think the general public has to be aware of and
Yeah.
understand that in reality, the way I see it is the same control that we apply to human, it's going to be the same we apply to AI agent, right?
Yeah, it's
As
it's funny as you speak, I think of like, the diagnosis for my health condition from Google is not the same as the diagnosis of my health
yeah,
condition from the doctor.
Of course,
They
of
both
course.
might be the same, but in terms of who's accountable to the actual diagnosis, the healthcare system is. Google is not.
Google is not, and the doctor has the liabilities and many other responsibilities that Google does not have. So the same thing, I think, because today we implement multi-agent system within the organization. Those agents also will have to have access rights and privilege at a different level and categories like a human should have. So the AI agent has to be treated as a human. So that part of the infrastructure that an organization like uh, like ours or any other financial and bank would put in place as, I would say, as a curated framework or whole, I think, to protect his client. And clearly, client is always first for me within the financial services industry, I think. So I do think that's also something that, as you look for the information and that come from AI from a bank versus the general AI, I think something you have to keep in mind.
Okay, so um, fascinating topic. I have one last question for you, which is, look, we talked about how fast this is evolving, but on the regulatory side, the EU's AI Act now has a high risk deadline for credit scoring, AML, underwriting. This affects insurance as well, is now pushed to December 2027. So if you're talking to your peer group out there, what's your recommendation? I mean, what should they be doing now and investing in to govern what is quite clearly coming next? And what's your recommendations?
I do think within the financial service industry, you won't, I think we're moving at the pace of the regulation. And not only the EU, but even within the US, we have a lot of latitude in terms of how the governance around AI, because of, I think, SR 26.2. So we have flexibility in terms of how we regulate the AI model versus any other model. And that allows us to deploy those at speed, right? So it's more so in terms of an organization, your philosophy in terms of risk, in terms of how you think through those new systems and those tools, because you don't want to also stop innovation. So you want to build the resources, the skills, the talent that will support the AI development. And I think many of the banks within the financial industry have done that. I think we've been, in general, flattening the organization, making sure also that we hire for the long term with talent that can adopt those new technology, highly specialized, and have the skills as well to maneuver within that new ecosystem with AI. So I do think we're smart enough to kind of adjust to those. And I think the regulators been also giving us the latitude in terms of how we handle AI model versus other models. So I sit into the committee that approve a range of AI model that's been approved within the organization. And I do think we look at those. And I think we've been relatively direct and frank is that there are still some there are known, but there are few things that we don't really know. But we want to make sure that we have framework in place that allow us to, whether we control before the fact, but certainly control after the fact and monitor the result and the decisioning of and the outcome of the AI, and always having a human in the loop. It's easy to say naturally than implementing from a practical term, but we want to make sure that there is accountability and human in the loop that provide assess the performance of the different AI tool that we implement. But it's a range of them that we implement. So it's going very fast.
I absolutely love how much human element you've brought to this, right? Absolutely love it. Because it's so easy to think, oh, humans are going to be replaced and humans aren't going to be needed. But what I've heard throughout this entire conversation today is, no, actually, this is going to create a whole bunch of new jobs for humans. And the accountability of a human to a human is going to be more important than ever. Armel, I really appreciate your time today and, being part of the Data Wire beyond the IT headlines. On behalf of our listeners, thank you very much for joining us. And we'll hope to speak to you again soon. For folks who are listening, I'll just remind everybody that we do these weekly, and we'd love for you to subscribe. And we'd also love for you to check out thedatawire.com for additional collateral, including an article from Armel himself. So thank you for your time, and for everyone out there, enjoy the rest of your day.